Hey, breathing again. Some gon' leave like trees in the wind. Well, y'all gon' see like B to begin. That BC days, y'all free to pretend. Hey, cap on the internet, rap, we ain't into that. Fact, I'ma interject crazy. Hey, whack, I'ma intercept that with the intellect. Chat, better give me that gravy. Hey, that mean chicken. Gotta blow that, get it back, never know the cost. Yak it, the black, and a few stacks. Never gon' lack any Cobras, dog. Hey, I don't got a cross for the NBA. I seen Tobin, the all-white promo vid. And if God be for me, I ain't got a mind to against me. Hey, shoot the shot like I'm Curry. Ooh, I don't cap for my pictures. Ooh, narrow way, but I'm sturdy. Yeah, I don't pass on the scriptures. Hey, walk with it 4 seasons. Never going back is no reason. Devil trying to tag you, throw demons. I don't never lack, I'm pro defense. Double check y'all Twitter feeds. It's a whole lot of big cap, like a biz hat, no ministry. Yeah, the wall fall like winter leaves. And if you don't got Christ in the middle with the bread like a centerpiece, you'll probably gotta retool. No sheep food, so hard for the inner piece. All cap like Captain America. Capsaicin and capture the area. Cap crunch, cap Marvel.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, y'all? It's your partner Dale and Cliff back in the saddle again for another edition of Real Estate Friday Live, which is we're changing the name, guys, to the Investor's Edge, guys. Real quickly, if you could, guys, do us a favor, like, share, and subscribe. Alonzo, I see you, big dog, out there, man. If there's a bell on the screen, click on that thing so when we come live, you come kick it with us, man, and see what we're talking about, guys. Let's dive in this topic real fast, guys. We're gonna dive in because your partner has to go officiate a wedding. So I got to go do some stuff here in a little bit. The wedding's on Sunday, but we're doing the rehearsal tonight. But it is what it is. Cliff, real fast, man. We got to do a current market analysis real quickly. Cliff, what's going on with the market, man? What's going to tell about what's going on, guys? What's going on?
Yeah, just real quick. Market's still going sideways. Man, I am seeing deals pop up on the market. Man, I've seen some areas that dropped as much as 100,000 for the last 24 months. If you can get into certain areas of DFW, it's soft. It's soft. If you're playing a long-term game, now interest rates are dropping. The market is soft. Days on market is slightly starting to tick up. Get in now. I don't know if we know it's cyclical. This is that moment of the bottom when it goes like this and it goes right back up. I think we're at that bottom where you can get interest rates, and you can, as long as you're throwing out lots of offers, you might be able to catch you one.
Yes,
get you a good deal. I had a guy today. I had to appraise a property. He's all in, Dale. 300,000 turnkey, 300K.
Okay.
And I'm just looking around right now. It looks like the value's gonna come back around 450, 460.
Woo! How much he putting into that thing?
300.
300. That includes the renovation budget?
Total purchase,
and the down
renovation, payment? Everything. Total.
Whoa.
300 turnkey. He gonna pop out there about 450, 460, something like that.
Whoa. What's the X strategy? Is he flipping? What's he doing?
Oh, he's gonna rent it.
That man's net worth just went up $130,000. Yes, sir. And clap of praise, whoever it is, brother. Hey, man, good job, man. Great work, brother. Keep doing what you do. The deals out there, baby. We love it. New construction. Yes, sir, baby. Cliff, we got one cooking also as well, man. So don't get you. We got one cooking too, y'all. Don't you worry. We're gonna film this whole process. Yes, sir. Yes, sir. I agree. The market is really soft right now, guys, and I believe it's gonna get even softer. And we're gonna talk about a topic today about, man, there's a lot of delisting going on. Delistings going on, guys. Which leads me to conclude it's going to be a nice soft market. Specifically, I say the first quarter because Fed Chairman Powell is not going to go nowhere until May, June, most likely. So it is what it is, man. Cliff, am I right? Doc him off.
Yeah, he's gone. About time. Time to get rid of his ass. He broke the whole goddamn system. My bad. I'm going off a little bit. I don't like that dude. Dropped the interest rates finally, and so we're gonna get somebody else in there. I think next year, whoever they get, he's getting put in there to drop rates, so he has to drop. It's possible. I'm not saying you may see mortgage rates get into the 4s.
Well, Cliff, we're gonna talk about that too, because I actually have an assumption that I want to run by you that I think makes logical sense. You'll let me know if it makes some sense. All right, guys. Guys, here are our topics real quickly, guys. Today we're gonna talk about what real estate prices are falling because of these listings. We're gonna talk about that and the reasons why. Number 2, the Fed cuts rates again. So you're going to allow for us to go off on Powell, but then give you what's going to happen. Number 3, flip or hold in today's market. Which one is the best option? And number 4, we're going to talk about, based on that option, what's the investor edge, guys. All right, let's dive into this topic real fast. Cliff, let's dive into this. Let's see which one do I want to do. Let's go through to the delisting first. Okay, guys, real quickly. Here is our first topic. Our first topic is this here: is you have housing going down. Delistings is happening. And Cliff, as a licensed appraiser, you're seeing a lot of this. Am I right? Am I wrong?
Oh, yeah. I'm starting to see it.
A ton of it. Guys, let's bring in our partners, man, from Valuetainment real quickly. They're going to talk about this in deep detail, and Cliff and I are going to respond to it. And I think it's going to make a lot of sense. Let's get into it. Here we go. Let's get into it, Cliff. Oh, where'd it go? Oh, my bad. 1 second, guys. Oh, my bad. Boom. Here we go. And there we go. Boom. Let's get to it. Boom. I'm going to get rid of that real fast. I don't like that at all. Boom. Here we go. Let's get in. No, what's going on? There we go. Here we go.
Home delistings surge as sellers struggle to get their price. This isn't good. They're trying to sell. No one's willing to pay the price. The realtor comes and says, let's take it off because it shows that it's been for sale for 328 days, and let's start it all over again. Here's what CNBC had to say about it. Go for it, Rob.
Housing market, but this year could be worse than expected as sellers seem to be giving up. Diana Olick joins us to explain why. Diana.
Hey, Mike, yeah, when a seller takes their home off the market, it's called a delisting, and they're now happening at an unusually high rate. Delistings in October, which are reported with a 1-month lag, were up 45.5% year to date and up nearly 38% from October of last year. That, according to a new report from Realtor.com. Now, this is the highest delisting year since they began tracking in 2022. Delistings began to rise in June and have remained elevated for 5 straight months. About 6% of active listings have been coming off the market each month, which is typically something you only see in the dead of winter. All right, so why is it happening? Uncertainty in the economy, stagnant and high mortgage rates, and of course, a still pricey market. Locally, Miami, Denver, and Houston are seeing the highest ratio of delistings compared with new listings. Those are also markets that saw some of the biggest price gains in recent years. And in addition, and because of that, more potential buyers are now heading to what Realtor.com calls refuge markets, more affordable markets. Grand Rapids, St. Louis, Cleveland, Milwaukee, and Pittsburgh are all seeing much bigger price gains now than the rest of the country because demand there is suddenly surging. Now, later today, we do get earnings from luxury home builder Toll Brothers. We haven't had any government data on the home builders since before the shutdown, but Toll has been outperforming simply because its buyers are less reliant on mortgage rates. Now, they did guide to lower home deliveries. We'll see how much lower when we get those results this afternoon.
Okay, Tom, what's going on here?
What's going on is they said delistings, this is the highest it's been since they started measuring it. What happens with delistings, when people finally decide to sell, they're usually selling into a roll-up market. They're seeing prices roll up around them. They're seeing prices go up. Honey, maybe it's time to, sell the house and buy something smaller, or maybe now's the time to, move across town to something bigger. Well, what happens with delistings? Delistings is what happens. Delistings increase, which tells the market observers that the peak of the market prices in the current point may be upon us, Pat. When prices peak, delistings happen. What it says is that guess what? There's now prices may be starting to go down a bit. Yeah. So number one, you see, are we seeing the delistings as a signal we may be at the top of market and prices are now going to moderate, go down a little bit? And remember, these prices have run up for a while, so it's not like these are going to drop below mortgage value like the great financial crash in 2008, 2009. So, but this is a sign. Now, what do we also see? Two weird stats. Number one, the layoffs have increased over the summer from July to now. Layoffs have increased, but job openings have also increased,
Yes, they have.
which might mean that we don't have the people in the right places or the right skills for the right jobs, because you have layoffs on one hand and then you have job openings on the other. But this, I believe, is a sign that in these peak markets, we're about to see pricing start going down. Because I put it up saying, hey, honey, it was $1 million. Let's put up at $1,050,000, see if we get any takers, because things have been up around us. But what if the real market for your house is really $975 right now?
Yep.
Because it's peaked a little bit. Well, then the realtor says, look, we don't want to go drop, because people will price under you. They'll think maybe you have to move somewhere for a job, and there's some psychology in buying. Let's just do this. Take a breather, and then we'll put it back out at $980 and go get your $975. There's strategy to it as well.
Dan, what feedback?
So, Cliff, real quickly, man, what do you think is the reasoning why of these delistings? Because, as you know, delistings is a nice little old trick that a lot of realtors use, which don't work. It don't work at all when it comes to smart people, but dumb people it works. But smart people it does not work. We think is behind these delistings.
Man, it's always the same thing. People try to outsmart themselves. There's not the buyers.
Exactly.
I flipped when there was a frenzy. I flipped a lot of houses, and I probably had 5 that all sold in less than 15 days when it was a frenzy. Dale, you remember in Dallas? You couldn't keep a house. Everything was under 30 days. I flipped a lot of houses during that time. You know when the market's like that. You put on the market, offer, right?
Yep.
Now, there are some markets where it's still like that, some neighborhoods, because the price point for what you're getting is still good.
Correct.
But for most people, the market got very inflated over COVID.
It did.
And it's pulling back to where really it should be. And people don't feel comfortable with that. They saw the equity they had. They saw the house that was a $400,000 house go to $550,000. They started feeling themselves. They want to put on the market at $550,000. It's not $550,000 anymore. It's $475,000.
Correct. I agree with you 1,000%, guys. Yeah, I think sellers are wanting a certain price point for properties, and they'll point to either the comps or the appraiser, which is their normal operating procedure, and they'll say, hey, Cliff, hey, Liddell, if we're sellers, if we're buyers, I want this price point. The reason I want this price point is because of the fact that the comps and the appraisal says this here. Well, as we both know, it's a buyer's market right now. A buyer's going to say, I don't give a damn about none of these comps. I don't give a damn about none of these appraisals. Player, I want it at this price point with these concessions. I want these warranties. I want all this stuff for me to buy this house, because I have 2 other properties I'm looking at right now. Why should I buy yours? I can buy these other 3. So not that they get the pickings of properties. And unfortunately, a lot of sellers unwisely were too married to their purchase price. It's real simple. It's not hard, guys. Unfortunately, that's what they've been doing. This is what happens: is property sit on the market for 90, 120 days, 8 months, 12 months. Unfortunately, and then you delist it, right, to reset the market, so to speak, and then you relist it again. That's a trick. People know what's going on. They ain't stupid. They ain't dumb. Am I right or am I wrong?
Oh yeah, most of them, they know, because they try to play that psychology game. Most people know, and you know, realtors too. What ends up happening is, realtors, they will tell you what you want to hear. They'll list it for $1 million.
Sure will.
And then cut the price after they got the contract.
Correct.
Right. So I see that happening a lot. I would say most of the delistings and most of it is realtors who are calling these people saying, hey, you know, in your neighborhood, you can get 500,000, 600,000. Yep. It's not true. But the realtors know it's a numbers game. The more houses I throw up on the market, a percentage will sell. So you got to understand that too, that I see I went to a house around the corner from mine and talked to the realtor. And I immediately, as soon as I walked out, I said, this is too high. I knew. Yes. I knew it was too high. And what did it sell for? $50,000 less than they had.
Told you.
Than they had it listed for.
And guys, my boy, social media insurance bro, go follow him, guys. Said he's seen stuff in New York said for years. He is not lying. Specifically in the commercial arena. I mean, in that arena, it's just sitting for like 36 months. Easy. And I agree with you. brother here says, I'm ready to buy again, so I would welcome this correction. Me as well. So prices are going to come down because they have to for sellers to move their properties. Agree, Cliff, or no? You don't agree?
I think the reason why they're being stubborn is because they have low interest rates.
Ooh.
They have low interest rates, and so they're being stubborn. That's why they're delisting and not lowering the price. They don't have to.
Yeah. Okay. So let's go a little deeper then right there then. If you have a seller who has a 2% interest rate, wanting to sell a property and maybe go lease a property, go buy a property, maybe get 5.25%. My question is you have a buyer saying that, hey, I want it at this price point. A seller saying, hey, I hear you. I want it at this price point because I don't want to give up my 2% interest rate to go to a 5.25% if I'm going to take a 20% haircut. Who wins?
Low interest rate wins.
Why?
Because it's the most leverage. You have the lowest payment you're going to get. If you're going to put it this way, if someone's giving you a loan at 2%, and then you're saying, hey, I'm willing to get a bigger loan at 5.5%, you're going to say, I'm going to hold on to that 2% until I absolutely have to give it up, because you're not going to get those payments again. You know that.
Thing is the seller in your situation, they actually have the leverage.
They do. I talk to them. The reason why is because I hear it over and over again. I go to the houses.
Okay.
They don't want to sell.
So why are they selling for?
Because life happens. They're moving. They want something bigger. But man, it's hard. I see it in them. They're like, it's hard to give up 3.25. They're telling me I'd stay if I could, or I want this mortgage rate because I'm going to a 6.5. And you can see them cringing, which tells you if they don't have to, they won't.
Mm-hmm. I see that now. Like for instance, my man's in here says, correct, I have a property at 2.77%. and I would not sell it. I agree. So I would say don't sell it. Seller finance it out. Keep the rate. Seller finance the property out. Make your cash flow, right? You actually have a mortgage in place, but you can actually put that with a loan servicer. A mortgage in place, print that out, take it to your new lender for your other property that you want to go buy, guys, and get your 5.25. Keep your 2, and go get your 5. Get a down payment as well. There's several different ways to slay the cat. It's real simple. It's not hard, guys. It's not hard. But yeah, Cliff, I see that. That's real world information. That makes total sense, guys. I'm rocking with them. It makes sense.
If they keep lowering the interest rates, it's going to help, but it's not going to help as much as you're going to. The best way to get a good market is to have money in buyers' hands.
You're right. Now, Cliff, let's go over to a topic, that you don't really we're gonna let Cliff go off on this one. So Cliff, man, I'm gonna put on some different music, man. Hopefully it'll calm you down. The Fed cut rates again. They cut rates again, guys. And so the most boring Fed chairman in the history of mankind has spoken. And so I thought it'd be wise for us to go ahead and bring him in. And Cliff, we can see what's going on with him, man. And see what he's talking about, Cliff, and see what he's saying real fast, man. Let's see, man, if it makes some sense. Here's our illustrious Fed chairman talking about a rate cut. Here we go.
In support of our goals and in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by 0.25 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer trajectory than expected, primarily reflecting stronger consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. In support of our goals and in light of the balance of risks to employment and inflation, today, the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments.
Okay, I'm done to do, man. He's so damn boring. Cliff, man, go ahead, brother, and go.
Man, if you're gonna cut. All this BS and like, oh, we're gonna do a quarter point, boy. You did a quarter the last year and a half. So a year and a half ago, you could have just cut point and a half point. I've been saying it for a long time. They need to cut. They need to cut it because we need more stimulus. Our whole economic system is based on the idea of stimulus. We are stuck. We're stuck. This idea that we're going to have the interest rate stay kind of high, right? That we're going to keep them up at, I don't even know, 4 1/4. We're going to keep them at 5. That ain't going to work. You're going to stagnate the market, especially after you just had an inflation spike. You have to drop the interest rates way down, and they're worried that that's going to cause even more stimulus into the market. Yeah, we have to. You created a situation where we need more money into the system always. That's what it's going to be. So we got to get it down. The mortgage rates have to get down to in the 4s, or else you're going to have a stagnated market. Because you have to understand, when the real estate market is booming, most of the United States is booming because it creates so much equity. It creates so much cash. People are selling. Mortgage people getting money, title companies getting money, average everyday person has a home. Just cut this 1/4 point, man. Just go ahead and just give it 1/2 point, full point. It don't make sense the way he's doing it.
Cut them damn rates, man. Cut them, player. What you waiting on, the rapture? It's gonna be too late then, big dog. Get your old boring ass out of here, man. He trash. He garbage. Oh, he over here pretend like he the president. Stay in your lane, player. I mean, this is the most boringest guy in the history of mankind. Cliff is right. Yeah. He's right. You did all this. And this was all political. At the beginning of the year, I can rock with you when it came to you talking about tariffs. Okay, I'm rocking with you. Okay, we're cool. It's just new. Let's see where it goes. Even the second time, rocking with you. Third, fourth, fifth, sixth time, shut your ass up. Shut up, man. This is our projection of what you assume. This dude's trash, man. Why can't we fire this nigga? Why can't we get rid of him, man? This guy's trash. Am I tripping?
No, it don't make sense. So we cut now, right?
Yeah.
Remember when he went, I forget, 8 months, where he said, okay, I think we good. No cuts. He said, we're going to keep it as is. And then he started cutting again. Ain't nothing changed. Ain't nothing changed. But all of a sudden, he don't know what he's doing. He don't know what he's doing. He don't have a trajectory of what he's trying to do with the economy. He just kind of, I think I'm going to cut now. Now, remember, this is the same dude when we was on here, go check the video, when we were saying you need to raise interest rates. Inflation's getting higher and higher. We kept saying it. It was at 6%. It's transitory. It's 6%.
It's trash, man. Garbage, man.
And it went to 7, 8, transitory. This man didn't stop saying the word transitory till it was at 10%.
Cliff, this Bama said yesterday, and I wish I had the video. I got to find it, though. This Bama said, and I'm going to find it, he said that in 2026, there'll only be one cut. In 2027, there'll only be one cut. And I said, wait, what? So this Bama is now projecting that it's going to be one cut in 2020. In the entire 2026, one cut. And he said 1/4 point. This nigga got to go. He has to go. And I believe he knows what he's doing, Cliff. He's doing this purposely. He ain't stupid. He ain't dumb. He know what he's doing. So investors, hey man, whatever this dude is saying, do the opposite. This is going to be a what's the holiday they say it is? Groundhog Day. Opposite world. This dude's trash, man. He's garbage. That's why I'm saying if you have a 2% interest rate and you want to sell, keep the 2% interest rate, right? Either rent it, really sell or finance that boy out, or lease option that thing out, keep that on it, and you let a loan servicing company service that mortgage for you. You now actually have a sale, so to speak, which is fine. You take that to your lender and say, hey, I've sold this property on terms. Here it is. They say, great, no problem. We'll take it. It is what it is. Now what happens is you can now go and get an FHA loan again or another type of loan at 5.25%, and you keep the 2% of a mortgage. It's right there. Simple. Ain't hard. This Bama stupid. Now I do believe that in 2026, though, Cliff, a dude guy's gonna come in, and what they're gonna do is they're going to raise the 2% inflation mandate from 2 to 3%. They're gonna raise it 3% to justify rate cuts. Watch.
That's how I keep saying. They don't want to. Everybody, they lie to everybody. Let me tell y'all the truth. Y'all will hear it. They already know this. We cannot do anything but do quantitative easing and cut rates for our market to function. We are too much in debt. We cannot pay it off, so we have to inflate it away. They already said this. If you listen to economic news, you listen to the Fed, we already know this. They have to inflate the debt away. It's too big. We broke. So why are we trying to fool people? Quarter basis point, half basis point. We can't. We got to get down the mortgage rates into the 4s minimum because we broke. We got to get the money moving. We got to grow the economy. It's our only way out.
He garbage. This nigga trash. This nigga trash. He's horrid. This is the worst for a chairman ever. So should you flip or hold in today's market? I would say it depends. I would say from my perspective, I would say hold. Because if you get into the flipping game, you now fall into the bucket of having to adjust to a buyer's needs and wants versus a leasing or seller financing scenario. Holding it. Now, if I was to sell, I would sell on terms. I would really kind of massage the selling portion of it instead of a traditional type of sale. If you can get that, I would sell on terms. Like if you're seller finance and get 5-10% down, and then maybe put a 24-month or 36-month balloon on that board, which is fine. But what I would do is I would force them to have to pay my loan off. And if it does not, I convert it over to a seller finance note even more. I would just extend out that note for 5 more years. Or 3 more years. So therefore, you effectively are just creating maybe a 3-year term lease, so to speak. But it's with seller finance. Does that make sense, Cliff, or no?
Yeah, it makes sense. And if you can't, to me, if you go in with the mentality you're going to rent, you could always flip. But if you go with the mentality that you're going to rent the property, you're already good. Lease option is probably the best. I think it's the most powerful option, especially if you put a balloon option on it and then you have a penalty on that balloon, like a 3-year, 5-year balloon, and you have a penalty if you do not refinance on that balloon. It's not just we get the property back, but we get the property back and we get a 3% penalty.
Yes.
Now they have motivation to close that button.
Yes. I would have that there. And if you really like the cash flow, so for instance, let's say for instance your rate is 2%, 2.77%. I'm gonna use my man's in them, right? And let's say then you charge 5.25%, 6. So you're making more than you're paying, right? And you're making anywhere from 3.5% to 4% arbitrage there. You killing the game, and you passed on the responsibilities from a seller finance standpoint on property taxes and insurance and HOAs to the new buyer. You just now are the bank to them. I like that hold. I would just say massage that selling portion to where you can look at flipping it traditionally, but also have an option to sell it on terms. That's what I would do, Cliff.
Yeah, and makes sense.
Alonzo always say, yeah, the flexible rate is 2%. It's not 3%. It's 2%. 2%. Cliff, man, you want to say anything, man, before we end, big dog?
Nah, man, same thing. You already know. You one deal away. And since y'all don't know, hit us up. So if you're looking for it, just holler at us.
Yeah, and also, Cliff, before we get off, guys, we have a licensed appraiser on the screen. He's a licensed appraiser. This is not normal. Okay, I know I say this all the time, but it's not normal. All right? What I would say is this here, Cliff, tell them about hunterappraisal.com. Tell them about that, man.
Yeah, so hunterappraisal.com. So basically, appraisal services, we can really take care of you across the country. And if you're looking for mentorship, if you're looking for just looking at your deal, if you're looking for an appraisal specifically, we can do it in the state of Texas, commercial, residential, whatever the situation is. We have somebody who actually just reached out trying to do a subdivision. So it's a smaller subdivision. I think it's about 30 homes. So we're walking them through that, seeing if how they want to price it. And so just hit us up. Go to hunterappraisal.com and we'll be able to help you out with any situation you got.
Yes, sir. Hunterappraisal.com, guys. Again, having a licensed appraiser on the screen is not normal at all. Also, guys, we are giving away a free ebook, guys. You make money real estate when you buy, not when you sell. For those that actually know the skills of locating distressed properties, as Cliff gave up front of the show, of a guy that's all in, and I believe you said 350, Cliff. So what you said, 300 or 350?
300.
300, and the ARV is 450. That's because that person knows how to locate a distressed property. Mm-hmm. And there's different type of distress variables. Okay, this free ebook goes into deep detail about those distress variables that you need to look at. All right, guys, it's a very easy thing to do. DM us the word real estate, right? Scan us QR code or click on the link below in the show notes, and you come get it. Now, lastly, you may not want to get in real estate, which is fine. There's another business model called a fintech model, guys. I believe this is going to be the new 9 to 5 because there's a lot of eliminating of jobs going on right now. So if you want to know what this new side hustle is, guys, that the banks and the insurance companies are actually outlaying, DM me the word mentor, scan on the QR code or click on the link below in the show notes. If you want to say anything, man, before we get off, Doc?
Man, well, just real quick, should we give them on the inside of what we building, what we got going on behind the scenes?
Oh, we
can get people signed up and get them knowing early so we can build that list. Why don't you let them know?
All right, guys, let me go and do it like this, y'all. Real fast, y'all. Guys, we actually have a app that Cliff and I are developing. All right, you guys are getting it first. Okay. All right. I ain't going to give you the name because we're still developing it right now, but it is going to turn the novice investor into a seasoned investor by using your phone. You'll be able to determine ARV as is scope of works right from your phone in seconds. That will be rolled out in the next couple of months. We're almost finished with the beta testing of it. We're going to continue the testing of it. And when we roll out, guys, on it, it's going to change the game. Cliff, you want to say anything about that, man?
No, man, just exactly what he said. Using your phone, you'll be able to have all the necessary information to make smart, real-time decisions. And if you're interested and you want to be part of the first group to sign up, holla at us. Because we want to see who's interested in having that ability. Even if you're a seasoned investor, now you can go do more homes faster because you now have the information to be able to put out more offers, to be able to see more properties, because now you have an assistant that can basically help you do all the things you need to do.
Guys, when I tell you this is going to change the game, this is going to change the game. We already have banks looking to see how this goes. We're talking about mid-sized to large banks are looking at this for us now. This is going to turn the novice investor to a seasoned investor, to where you can walk into a property, no matter if it's commercial, an apartment complex, or a single-family residence, a duplex, a condo. Pick a spec, pick a type. You can walk in confidently. Even new construction. Yes, sir. It's going to be rolled out here shortly, guys. So again, just remember this. How can this be able to allow for you to become a seasoned investor, a novice investor to a seasoned investor, using your phone? Cliff, you want to say anything before we end, brother?
All right, that's it, man. Just hit us up, and we'll let you know what's going on.
And what we're going to do is we're going to give a certain crew of people first dibs to it. Right? So we let you guys know up front. And as we continue to develop it, guys, you're going to be like, what the heck? And you guys get first dibs at it. And then and over the weeks, we will outlay what it actually does. Okay? So you'll be like, what the hell? It's going to change the game. Yeah, it's going to change the game. But guys, that's all I have to say, man. Cliff, want to say anything before we get done, brother?
Now we good, man.
But guys, you know how we say it, man. Before you leave while you can, you see that thing. Because we look better than you. Take the place for your mom and holler at you. God bless you guys. See you guys next week, guys. All right, y'all. Peace.
My whole thing is, one thing I hear a lot of the times when it comes to anybody in real estate is, I don't have the money or the credit or the time or the intellectual property. And I said, okay, no problem. I have the money, have the credit, have the relationships. I'll teach you how to locate a good deal, right? Buy below wholesale.
I love that.
And once I teach you that, right, I'll bring me the deal. I help you underwrite the deal, which is fine. I'll even fund the transaction for you as well. So there's no excuses on the table at all. That's why we call that the cash flow club. Period. So what happens is people always ask me all the time, Dale, can you train me? Well, I don't have the time to do that. But what if I set up a platform for it to where you get on-demand training? Anytime you want to, because the training you may need may be after you get off work, early in the morning, during the day. You just log into your account and get the same training as if I'm sitting there one-on-one. We're talking about our attorneys, our general contractors, our appraisers, as well as me, talking about how to structure your business, how to put together what they call a power team. A power team is very important. How to put a deal together, right, and buy it at the right price point. How to market. That's one technique that people don't understand. That you can actually get a list of properties that from your city for free.
Whoa. So walk me through that. Like, you can physically get buildings or homes or properties available for free?
Yeah, I'll send you guys the bill in the mail. It's real simple. What you can do is you can actually call down to your city and ask for the violations division. What happens is you say, hey, I want to see what homes in our city actually have violations. What are violations? High grass, no paint, vacant. You have boards on there. Those are actually violations that the city, or citation that the city has actually levied against that property. They'll give you that list for free. It may be a little bit of a fee, maybe $100.
Sure.
But it is what it is. Then what you do is you actually you can contact those sellers of those properties one-on-one.
Wow, and that's how you make your money. That's one way. That's one way.
If you'd like to learn how successful real estate investors make money when they acquire real estate, but not when they sell it, click on the link below, swipe up, DM me the word real estate to download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed. I'll let your partner and download the ebook today.
Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Bless God.